Hey folks, welcome back to the channel. This is Jason. How's it going today? Let me share my screen here and let's talk a little bit about the market. So news wise, everything was actually really negative in the market, right? And that kind of surprised me because we've had really good really good days in the market for the last I think 3-4 days in a row. But the news tends to be all negative right now. And I'm never one to sort of feel what everyone else is feeling in the market. I kind of take a contrarian approach when it comes to when I invest. However, I am looking at things right now in the medium term with a little bit of concern. In the long term, we are I mean, the evidence is in right now that we are really in the middle of a long term destructive cycle when it comes to the energy industry. And I want to talk about that a little bit later in the broadcast. But I definitely want to talk about some of the questions that I got when I logged into this screen, to the software rather, before I even started the broadcast. People were posting comments. I'm going to try and address all the comments today and go through some of the news that I want to go through. But let's start off with a comment here with frequent watcher here. Tell 666999, is it time to get out of Chinese stocks? For me, it's uninvestable at the moment. Sold all of my NEO. So at this point, I'm so far down on some of my Chinese stocks that it just doesn't make any sense to get out of them right now, except maybe to do some tax loss harvesting, which I may end up doing some tax loss harvesting because I had some big gains in Tesla earlier this year. And that was the result of a call being sold that I wasn't paying attention to, but I had to recognize some big gains. I probably want to match that up with some losses. If you don't know what tax loss harvesting is, it's basically just matching up the gains that you had during the year with some losses that you think are probably not going to go back up in the next 30 days or so, or you may want to exit those positions entirely. So Chinese stocks. So you're always paying a price for being invested in Chinese stocks, no matter what. There's always a lot more in the way of volatility. The market there is a lot less mature. Oversight rules, they've gotten a lot better in the last 15 years or so, but the consequences for big players there doing nefarious things haven't really been publicized, right? So there are still a lot of folks that are doing bad things on US markets that they wouldn't get away with in Chinese markets, and the same thing in Chinese markets as well. So is it time to get out? I think the time to get out would have been a little while ago. And now we've kind of missed that boat a little bit. It really depends on how far down you are in stock. So on my XBong stock at this point, I think I'm down like 75% or something like that. I exited NEO at a really high level of return, but that's simply because I bought a lot of NEO for very little money back when it was, I think, $1.81 a share or something like that. So, and by selling options on that as well, that lowered my cost basis even more. So that was another one of those things that I need to do some tax loss harvesting with. So, um, so the other thing to pay attention to when it comes to Chinese stocks is what is the news that you're getting. Okay. And remember, the news is always filtered by a couple of things. Number one, you probably don't speak Chinese. So what you're getting is the news that people translating news into English think that that is worthy to be heard over here. There's so much more going on in the technology markets, and I do more than a surface level dive into Chinese technology markets, and so I'm going to get to you, Bram. You always have some good comments. So, but I do want to say that the news that we get here is curated. It's not like nefariously done or anything like that. It's about making money. It's the articles they think people are going to read. And this is why the only EV companies that folks pay attention to here are NEO, XBong, and Li Auto, with a little bit of sprinkling of BYD in there. And I mean, I hear people say all the time, "Oh, I think NEO is a better company than BYD, or XPeng is a better company than BYD," whatever the flavor of the month is. When the reality is, BYD's got 250,000 employees. They make a lot of their own electronic components. They make all their own batteries. They're really far along on that vertical integration. Some of their manufacturing processes, especially when it comes to like their giant casts and things like that, that's nowhere near what Tesla is doing. But their sales are blowing everyone away. And yet this is not the company that gets all the press here in the US. It's a matter of sexiness to a degree. The designs of their vehicles, in my opinion, are perfectly middle of the road designs. They're not spectacular, and they don't really stand out. And I think the highest vehicle production they ever had prior to the switch to what China calls the new energy vehicle whole scheme, I think they made about 1.4 million vehicles at most. But they do a lot more things than just make cars. Of course, they're really in the past have been more of a battery maker, right? So yeah, so selling all of your Neo, I kind of understand why that's happening. The big thing for me is not Xi Jinping being reelected to another 5-year term. I don't know what that means. And I think that a lot of people commenting on this don't know what that means either, largely because internal Chinese politics is really a giant black box that we don't have access to. There's not a lot that's published on that. Much of what happens is very secret, and I really don't know what the level of social discontent is with Xi Jinping and his handling of the economy. Now, I understand that people are upset over zero COVID policies and lockdowns, like citywide lockdowns that last for months at a time. But I don't know how deep that sentiment runs when it comes to his leadership on the economy in particular. I will say one thing about the shifting winds of the Chinese electric vehicle market and electrification in general, and what that means about geopolitics. 22% of vehicles being sold right now in China are these new energy vehicles, with a large percentage of those being battery electric vehicles. So you're looking at BYD now is selling more battery electric vehicles than they are anything else. There are spin-offs from every major auto producer that existed prior to this initiative. They've now spun off new energy vehicle dedicated companies, and most of those don't actually have a line of hybrid vehicles. They are battery electric vehicles. So there's a lot going on in there. The Chinese market goes through larger ebbs and flows than ours do. They have a much less mature investing audience as well that has likely never seen a recession. And if you look at the numbers that came out from China today, 3.9% growth, first of all, I'm not sure I believe those numbers. They did come out after a delay as well. But in the case that we actually see a contraction of GDP in China, I want to understand better how society is going to react to that, because they have not seen one since 2008, 2009, just like the United States hasn't. And a lot of the population has been conditioned, just like it has been here in the U.S., that this isn't going to happen anytime soon. So, market was up 417 points today, and it's up better than more than 1,400 points in the last 3 days or something like that. And all you see in the news is doom and gloom. So, yeah. And Martin Cousineau says, can't wait to hear your thoughts about the situation in China, though I'm quite sure there's not much you can say to make us feel hopeful at this point. There isn't. And really, it's not to do with Xi Jinping. The new round of sanctions and export controls that went on with China, that is going to be the big determining factor on what investments look like here in China. And I can tell you that the situation is absolutely not hopeful. There hasn't really been any other bit of news out there, including supply chain woes and all that stuff, that has gotten me more concerned than what just happened. And folks didn't really there's a big deal made about it on YouTube, but very little of a deal made on it in the mainstream media, where this is going to be absolutely crippling for some companies in China, as they will no longer be able to access certain technologies and certain equipment used in the production of some of the most advanced microchips. Now it's not beyond the capabilities of Chinese engineers to figure this out and do this on their own, but now it's going to take time to do that. And all the plans that we had for Neo and Xpeng, the expectations we had about how they're going to deliver on technologies, the ability to deliver those technologies in scale has to be pushed back a couple of years now, guys. That's the one thing that all of this stuff, I'm sure that Chinese engineers are going to be able to figure this out, but the timeline to scale production and all that is going to be pushed back years. So I'm a lot less hopeful for those investments bouncing back after this, bouncing back to prior levels. immediately after this current market crisis is over. And I see a lot of market improvement next year as we're starting to shake out inefficient companies. We're trying to shake, or companies that don't really deserve our capital are being shaken out here. So, but no, I wish my job was to make you feel better and hopeful. But that's not the role that I've chosen for this channel. And in fact, I'm gonna address the next question here. Linus KK, hi Jason, I'm curious what your long-term plan is for this channel. Love the streams, but they don't seem to attract new subscribers. That is true. I actually have been losing subscribers lately, and a large part of it is because I've gone to a lot of channels have lost subscribers lately, particularly stock channels and economic channels. And I think when I read a study that was done by YouTube where this is actually kind of perfectly normal for this time period, but it has been a little disheartening for me. I want to get back to making longer form investigative videos like I was doing before. My issue has been time. I will continue to do this channel though for as long as I enjoy it. And I'll be honest with you, I actually enjoy the hell out of it. I enjoy the interaction. It keeps me, even though I'm less involved on the professional end in finances than I was before because I have so many other businesses. This keeps me involved in a way that I really enjoy, where I get to talk about the technology stocks that I like talking about, the geopolitics and economic stuff that I like to talk about. And I actually learn a lot from the comments that you guys put on my channel as well. So I will continue doing the live streams no matter what. And I will start getting back to making videos as well. Those definitely do better in terms of revenue. You make a lot less money on live streams, but look, I make so little on this. I'm obviously not doing from the money, right? It's for the money rather. I'm doing this for fun. So Travis, let's see, Mr. Fikva. I'm not even going to try anymore to pronounce that. So I bought more Neo. Share price was $9 in 2018. Fundamentals have improved dramatically since that time. Do you agree it's undervalued at this level? So the word undervalued is really difficult to use for any company that isn't making a profit. Do I think you have a really good shot at making a 2x, 3x return in the next 2 to 4 years? Yeah, I do. Do I think that Neo is going to be able to deliver on all of their promises? No, I don't. Not in the time frames that they originally promised that on. So, but Neo at $9 today probably looks like a really wise investment, 2 to 4 years from now. But it's going to be a nail biter. Like I bought a bunch of Neo at like $1.81 a share. $1.81 a share. And then I was underwater for like 9 months or something like that. And then it peaked its head above and I almost sold then. And then finally, by the time I looked at it again, it was so far up. I'm like, okay, I'm just going to hold on to it, and didn't decide to sell any until about June of this year. And I started aggressively pricing calls in order to exit that position. But I didn't do it because of any Neo specific reason. What I wanted to do was just sort of narrow my risk profile in China beginning in June, largely because I've been around the block a few times, and I understand that when the rest of the world, when the rest of the world sneezes, China gets the flu in terms of stock market performance because it's just a little bit more volatile. And the fact is that we may not see in our lifetimes fair valuation for Chinese companies because of the political risk calculation in there. And I'm not sure, and it remains to be seen, I'm not sure that the election of Xi Jinping actually improves that calculation. And that's my big concern. So, yeah. Michael Will says, quiet night and watching Jason and munching my way through a tub of Ben & Jerry's on the simple flavor. Man, I've been on a less than 2,400 calorie diet now for about a year, and I've taken off about 45 pounds or so. Ben & Jerry has not been on my consumption list for quite some time, but I do enjoy eating still. So, but thank you for always taking the time to watch my live streams. I really do appreciate that. So, Dewey says, so many experts, but there's only one Jason. I don't agree with everything, but I get enough confirmation bias here to keep coming back. I've never held Chinese stock. So a couple of Chinese stocks have been very good to many investors over the years. And these are really the large mega caps like Baidu and Alibaba. Alibaba got in some political trouble, and Baidu, of course, has not seen any of those. And there are a number of other companies in that group as well. But even those companies, when you're looking at Alibaba, it there's a giant discount on the amount of earnings they have simply because it is a Chinese stock. And the big firms waver between saying buy Chinese stocks and China is uninvestable, and they'll do this sometimes the same time in a month. All I can say is if you ever do decide to buy individual Chinese stocks, you have to be prepared for volatility, and you should be prepared for disappointment. I've made some money off of Chinese stocks, but it's been nothing compared to investments that I made with U.S. companies. And no country's stocks that I've invested in have compared to what I've made through U.S. companies, and that's just the simple truth. So, yeah. Hi, Jason. I believe reaction to the election results are sheer speculation on policy and approach. A lot of Xi's main financial advisors are all for expansion to and through U.S. and foreign expansion. So, as from what I know about the people that he's put in place, and these are all his allies that supported his economic policies in the past, that appears to be a comment that's actually true. So there's a lot of bluster going on too on the diplomatic stage, but there's a lot of very reasonable and calculated negotiation and business dealings going on with Chinese regulators here in the U.S. The deal negotiated to keep Chinese firms on U.S. exchanges was something that there was fanfare made of it on YouTube and fanfare made of it in the media, but all reports basically said that it was just a serious negotiation and there was really nothing to it other than negotiation. So you may be correct that his main financial advisors are all for expansion to and through the U.S. and foreign expansion. And I think they need that to survive what's coming next. And they need to work their way up the value chain because they still have a lot of people, just like here in the United States, but they still have a lot more people that have been left out of this economic miracle of the last 20 years or so. And yeah. And Dewey says, Xi wants what's best for China. Putin wants what's best for Putin. Yeah, that's honestly, I think I think that's probably accurate as well. And I talked a little bit about Saudi Arabia cutting oil production by 2 million barrels a day on my last live stream, and I neglected to mention that if you wanted to get back at Saudi Arabia or Russia or any other major foreign producer of oil, the best way to do that is to buy an EV. And there are people that are listening to this that are going to say, okay, Jason, that's BS. And they have got a million excuses as to why that isn't true. And let me remind you that 72% of all end use of petroleum products in the United States has to do with transportation. And up to 50% of that is just light transportation, meaning cars, trucks, people going back and forth to work and that sort of thing, right? So let's take a look at really kind of what that means here. And this is something that I was looking at earlier today, and I'm glad you brought that up, that Putin or that China. And the reason that China is pushing new energy vehicles is because they don't want another country because they don't have their own oil, or not a lot of it at least. They don't want Russia to be able to do to them or any other country to be able to do to them what they're doing to Ukraine right now and to Europe, which is energy blackmail. Energy blackmail in the US, if we were to switch to electrification of transportation, is going to be a lot more difficult. And this is why. This is from the U.S. Energy Information Administration, the government agency that keeps track of all of our energy figures. And we look at U.S. utility scale electricity generation by source, amount, and share total as of 2021. So fossil fuels account for 60.8% of all electricity generation, which is a giant improvement over where we were 20 years ago. Natural gas alone, and this is the good thing, accounts for 38.3% of our total production. That's all produced right here in the United States, folks, right? We don't have to go anywhere for that. Coal, which is also produced for the most part right here in the United States, accounts for 21.8% of our electricity generation. Petroleum, liquids, coke, and other gases only accounts for 0.5% of our electricity generation. And if you look at electric vehicles being roughly 1/3 of the energy cost to drive around as compared to a internal combustion engine, This is the best way for us to break away from basically what is an energy war right now going on in Ukraine. It's an extension of the energy wars that started in the 1880s, where we started fighting over consumable energy supplies. And I'm really talking in the modern context. I'm sure that's been going on for far longer, but I'm talking about in the modern context from the 1880s through 2022. You can say that almost every conflict has an energy war aspect to it, all through the late 19th century, the 20th century, and now into the 21st century. The best way to eliminate one of those reasons to go to war, or one of those levers for war, is for us to adopt the electrification of transportation. So policymakers figured this out a long time ago. They just haven't been doing a very good job of telling the rest of the world that this is happening. But the shift over into electrification of transportation is going to remove a lot of demand for oil. Not all of it, of course. About 26% of demand for petroleum products is not related to transportation. Only 26%. Do you know how many companies can survive on 26% of their business? Not a lot. When I say companies, you're looking at entire countries where the oil industry is owned by the South. Like Russia basically needs oil to be at roughly $85 a barrel just to pay for all the things that they promised to pay for. And Saudi Arabia is helping them do that right now. I was reading one article that estimates that their energy income has probably increased by about 38% this year. Despite the fact we have a bunch of sanctions, and that's money that goes directly to the government because their industry is essentially nationalized. So so I think that's one of the biggest things you can do to end these types of conflicts. It's one of the biggest things you can do to basically stick to give the finger to these countries that are trying to manipulate global oil supply to create political outcomes in their favor. So I think oil should function as a market where there's a supplier, there's a seller, and they both agree to a price. And that's not what it is now. It's a cartel. So so Chinese EVs are by far the biggest investment for any country and are planning. I thought I saw that somebody sent me a super chat, but I was talking and didn't get to see it. So if you did, thank you very much. But it didn't actually show up on my screen here. So I don't know who sent that. It was Nelly Furtado. Thank you so much. All right. So Chinese EVs are by far the biggest investment for the country, and they're planning to be world leaders, in which they kind of already are. And smart people shouldn't think that China would sit on that advantage. They're not going to sit on the advantage. And in fact, I'm really glad you brought that up because I've got some articles up here right now that are going to say something about the battery market that a lot of US investors are not prepared to hear. Actually, maybe it's just the nerds like me are not prepared to hear. But China's battery installed capacity soars 101% year over year in September of 2022. So that's great. I mean, we all expect that basically battery capacity has probably expanded for everyone about 100% year over year, but that's not the big news here. Of the batteries produced last month, 24.3 gigawatt hours and 34.8 gigawatt hours were ternary lithium batteries and lithium iron phosphate batteries. So lithium iron phosphate batteries, the former mentioned there, is 34.8 gigawatt hours. That is not the dominant battery chemistry here in the United States, produced here in the United States, but it is by far 50% over other battery chemistries, this lithium ferrophosphate chemistry, which is, CATL has a version of it. Almost every company does, but it's CATL and BYD have probably the most famous ones. In fact, they have a picture of the Blade battery right here. This is the most dominant chemistry. And it's not because it's the best. It's because it's the cheapest. It's because it has the best safety profile. And the materials are not constrained by any sort of political considerations. China has lots of its own phosphate deposits. The United States has lots of its own phosphate deposits. And Africa has lots of its own phosphate deposits. Everyone else is going to have to trade with us to produce those. Not only that, there are a ton of advances being made in sodium ion batteries right now, and there already is a sodium iron phosphate battery that's out there. It's been out there since 2018. And I read an article that basically said there was a breakthrough in anode materials that's going to allow basically the problem is that the sodium ion is a lot larger than the lithium ion. So there were issues with penetration into the anode. Something has been done where some new electrolyte has been discovered and it's made this a lot easier to do. So I don't know the particulars on that right now, but it's a matter of time before we see sodium ion batteries in all kinds of applications, probably stationary applications like the batteries that you're going to have on your wall for smart grid management are probably going to be sodium ion batteries, watch batteries, laptop batteries, phone batteries, all those things. And we're probably going to see lithium iron phosphate emerge as a dominant chemistry for a while. But it's not just that. There's tons of other research that's going on right now. And I brought up one article here, and let me show you. This article by itself is not important. Canadian company plans to build an EV battery gigafactory for New York, right? So it's an Ontario-based battery manufacturer, Electrovia. It's an opening phases starting in late 2023. They're going to be building. So the thing is, there are companies that you've never heard of now that are investing billions and billions and billions of dollars to build battery factories here in the United States. And that is a result of the curiously named Inflation Reduction Act, which gives heavy incentives, economic incentives for EV makers to use American sourced products. There's two reasons for this, of course. In this new phase of energy use that we're going through, we don't want anyone to have the power over us like Russia had over, or thought they had over Western Europe. And I'm going to go over why they don't actually have that power anymore. And we're going to talk about that. The predictions that I made about liquid natural gas carriers in the U.S., not the U.S., but the world not being able to supply Europe, those were wrong. And it looks like the supply caught up a lot faster to demand than we thought it did. And I'm going to talk about that right now. So in terms of electricity production and for heating, natural gas is extremely important in the United States. It's more important for heating in the northeastern part of the United States, but in Europe, it's extremely important for heating. And this is the big news here. A wave of liquid natural gas tankers is overwhelming Europe in energy crisis and hitting natural gas prices. It's hitting them in the opposite direction now. So 60 liquefied natural gas vessels are slow sailing or anchored around Northwest Europe and the Mediterranean and the Iberian Peninsula, according to marine traffic. The vessels are considering floating liquid natural gas storage since they cannot unload, and the situation is impacting the price of natural gas and freight rates. Natural gas is critical to European energy needs, and Russia has reduced the supply of gas. But existing storage capacity in Europe is at 93%. That is way ahead of where I thought they would be. I think that Russia made a strategic miscalculation here, and they pulled the trigger way too early on using natural gas as a weapon, and they just gave Western Europe too much time to prepare, and natural gas producers around the world too much time to prepare. And this is a picture of a liquid natural gas import terminal at the port of Rotterdam, which is in the Netherlands, which, if you guys are fans of mixed martial arts or kickboxing, Rotterdam has some amazing kickboxing academies there, and they produced a ton of great fighters. It's also a fun city to visit. But yeah, so 60 liquid natural gas tankers have been idling or slowly sailing around. The wave of LNG tankers has overwhelmed the ability of European regasification facilities to unload cargoes in a timely manner. So this is going to cause a drop in prices, and has. European gas prices soared above 340 euros per megawatt hour in late August, but this week dipped below $100 for the first time since Russia cut supplies. Before the war, the price has been as low as 30 euros. So it's still more than 3 times above where it was before the war, but this is a giant improvement, over 10 times more expensive or 11 times more expensive than it was before the war. So, yeah. So, all right, let me get to some more questions here. I did want to share that, and some of the other things we should talk about too are all of the companies out there in China that are creating demand for batteries. Like, if you are not invested in the battery supply chain, at some point you got to start investing in that. And look at what's going on in China right now. Beyond the headlines of Neo, Xpeng, and Li Auto, and you're going to see companies like SAIC, which I believe is they have a partnership with GM, and SAIC's Motors Rising Auto sees the R7 flagship hitting the market. So coming with 4 trim levels, the Rising Auto's R7 features a post-subsidy price of around $40,000. And notably, users who adopt also vehicle battery separation consumption model can get an R7 with a price as low as $28,500. That is the same sort of battery rental scheme that you have with Neo that allows them to separate the cost of the battery and the cost of the vehicle, allows them to qualify for subsidies, but also, and you can rent battery packs, separately on a monthly basis. But also, what does this have to do? If you can rent battery packs separately on a monthly basis, that of course suggests that the battery pack can be easily separated from the vehicle. So lo and behold, and this is a good-looking SUV, but it looks like a number of other SUVs here. I don't know if it's really all that special, but it doesn't necessarily have to be all that special. This is what I wanted to point out to you. This is one of Rising Auto's battery swap stations. They're not the only one. There are companies all over China right now that are producing battery swap stations. We're seeing the first battery swap stations from Neo actually go online in Germany as well, which is pretty exciting news. Although they've had a few rollout hiccups in Germany right now, I don't think that'll affect their long-term prospects. So, yeah. Travis says Neo stated clearly that U.S. chip restrictions will not affect them. I don't believe that. Just like Russia said that U.S. chip restrictions won't affect their ability to produce precision-guided missiles. So I don't believe that, and largely because Neo is not going to be able to compete with the larger automakers that are going to be demanding those chips that they need, and they're not going to be able to compete when it comes to economies of scale. The people that serve those markets are going to want to serve those larger companies first. And semiconductors equals Taiwan. And a lot of people don't realize that basically the U.S. is forcing almost every American citizen or people that have dual citizenship that work in China, they're forcing them to either choose to quit their job or possibly to lose American citizenship. And I think it was last Monday that almost every high-ranking U.S. executive and engineer quit in China and went somewhere else. Taiwan announced that until they figure out what's going on with sanctions, that they're not going to be doing any more business with China. So this is what is I think this is a very touch and go situation. None of us know what's really going to happen right now. I am proceeding with ultimate caution right now when it comes to new investments in China. I see a lot of opportunity that I would like to buy into, but I want a little bit more data, a little bit more time to see which way the winds are blowing before I jump in there. Hal says, keep doing what you're doing. The small cohort is much more inclusive, and thank you always, generous for your time. Thank you so much. Like I said, I really enjoy these live streams, and I enjoy it more than I like making videos. Although I don't mind liking the video so much. It just takes a lot more hours of research and hours of editing. So, yeah. Let me see here. Hi, Jason. What's your expectation on the upcoming SoFi earnings release and the following share price? Man, to be honest with you, I think SoFi's earnings release is going to look pretty good. And a large part of that is it's just good timing. And they're going to start. So the big banks right now just started showing on their earnings releases pretty large, 15, 20% increase on interest income. And you're going to see that just get wider and wider and wider as time goes on with the bigger banks. And a lot of these smaller fintechs aren't going to be able to capture all of it. There's also an increase in trading income as well. The fixed income market has sort of roared back to life. So SoFi is not going to really enjoy the increased commissions on the fixed income market. But they are going to enjoy increased earnings when it comes to interest earnings, right?
And because of the bank charter and because of the spread now between the pittance that you're getting on your deposits versus what they're able to loan money out for. So even though transaction volumes are lower when it comes to loan amounts, the income that they're building now and the future income that they're building is per loan is a lot higher than it was earlier in the year. It's twice as much as it was earlier in the year. And this is just going to build for as long as interest rates stay high. So this is exactly what I was saying when it comes to financials in terms of a longer term perspective when it comes to investing in financials, that you will see loan volume decline, but you're going to see the income derived per loan is going to be larger, and it's going to extend for the lifetime of that loan, provided, of course, there's no defaults, not mass defaults. But no, so I expect SoFi's earnings to look fairly decent. Basically, everyone who's reported earnings so far in the financial sector, the overriding theme has been it's not anywhere near as bad as we thought, and that has tended to support the stock price. Something is going to come out probably, and we'll actually see a bump in SoFi, but I don't think it's really going to last very long until we really see that solid month over month gain in actually interest income from loan operations. Before that, they were pretty much dependent on origination fees and commissions and that sort of thing when it comes to that, and they weren't making all that much money on the back end through interest. That's all changed. Also, despite the fact that we have states suing the government to stop loan forgiveness where they have no standing. I mean, the lawsuits were utterly ridiculous. I actually I've been reading a lot of legal documents recently surrounding, of course, everything that's going on with the farmer guy, but a lot with this case too, when it comes to when it comes to the loan forgiveness. And I think at this point we have clarity. The Treasury Department is going to be able to get rid of the $10,000 in loans for just about everyone, unless you have a private loan, of course. That cut out about 700,000 borrowers, and $20,000 in forgiveness for people who receive Pell Grants. And I think that just providing some clarity and the fact that loan forgiveness is over in January is probably going to provide a pretty big boost to SoFi. And we're going to see that before January. If you look at the price of options, a $9 call, which is way out of the money right now for December 16th SoFi, is way higher than I would expect it to be, like way higher. I would expect it to be a lot lower because SoFi really hasn't shown that much day-to-day volatility. And you usually see options on stocks that have a lot of volatility, they're priced higher. But SoFi hasn't shown that tons of volatility. It's just been steadily going down, right? But on the upside, a $9 call, it should be worthless. And it's actually not, December 16th. So I think that a lot of people are expecting a bit of a run up in price running into the beginning of the year as anticipation starts to build for the end of the student loan repayment moratorium. I got to be honest with you, though, I'm not all excited about it. They've been moving for years now to make student loan refinancing a smaller and smaller part of their business, and they really focused on growing other parts of their loan portfolio and other lines of business like financial services. Financial services is growing at a rate of like 50% annually. And that's really where we should be concerned. Their technology arm is growing at the same rate, although their earnings multiples in that division are a lot less. They're not profitable at this point. So no, I am absolutely convinced here that we're going to see a turnaround in SoFi, but it's not going to be a dramatic turnaround. It's going to be a steady turnaround, just like the person whose hand is on the tiller right now, Anthony Noto. He is just a steady guy with a lot of gravitas, and he's not that exciting. He's boring. He's competent, which is exactly what I want for this type of business. So yeah. So for me, the risk with NEO, audit, and growth, how many cars are they delivering per month? CCP, they'll never allow a company to become too big. The Chinese, a company, Evergrande. So I mean, in terms of, NEO is a tiny company in comparison to a company like Evergrande in terms of how much of the command of the economy that they actually control. NEO has a long way to go before they would ever reach the size where they would threaten, like they cracked down on Evergrande and they cracked down on Alibaba because they had CEOs that were kind of big personalities that kind of got out of control there. Neo, on the other hand, doesn't have the same thing to worry about with William Lee. Well, who knows? As William Lee becomes more wealthy and becomes, he might become more eccentric, like a number of other billionaires, Jeff Bezos and Elon Musk. They may become more eccentric and more outspoken. So who knows? But the issue with the CCP, the Chinese market, has not been that the Chinese government wouldn't allow companies to grow that big. They had too much regional fractionalizing, and they had destructive competition in the auto companies. They just weren't allowing bad ideas to die. So yeah. A second here. Doug B says there was an interesting article shared on your Patreon channel today about building unhappiness with Xi and party. I haven't read it all, but I'm guessing things won't change. So the Chinese Communist Party has actually been more sensitive to public sentiment than you might think when it comes to unhappiness with political leadership. And it's, at least since Mao, they've been a little bit more sensitive to that. So they have been brought down, various leaders in China's past have been brought down by popular discontent that was communicated up the channels, and then insiders basically removed people there. So, but did anything really change in terms of policy? I would actually say that until Xi Jinping, it really didn't. Xi Jinping has made a lot of, and I can't even quantify how many reforms that he's made that have allowed the free market economy to work better over there, while at the same time tightening controls in terms of personal expression, monitoring, and the police state. So it's been a mixed bag as far as what he's done. And remember, the CCP has a lot of loyalty. Like, a lot of Chinese people are filled with stories of the famine that happened during the Cultural Revolution, in the period just after World War II, in the period during World War II, the period right before World War II. Basically, since the Taiping Rebellion in the 1830s through the 1980s, some part of China was in famine and millions of people were dying from hunger. Right. The Chinese Communist Party, though, gets the credit for bringing them out of that, really by embracing state capitalism beginning in the 1980s, right? So it has a lot more loyalty than you might think. So there could be unhappiness with a single leader. We get a new leader, and it's possible that nothing changes in terms of policy. That has happened several times since the 1980s. And Noah Joa Show says, are you still holding your SoFi shares? Yes. I have, I think, about 7,200 shares or something like that. It's my highest convincing stock for sure. I believe that Galileo will end up being bigger than SoFi itself in 5 years. So I would actually love to hear your reasoning behind why Galileo will end up being bigger than SoFi itself. So for a couple of different things, like I use one of the companies I owns uses Toast as a point of sale thing. And then I was just having a conversation with my sister, who also owns a bar, and how she and her husband run a bar, and they're also using Toast. And we were talking about all the ways in which Toast makes everything convenient and what a great product it is. And this is, I don't own any Toast stock. Maybe I should. But we talked about that. And I don't see Galileo having that sort of advantage where my sister and I will talk for 45 minutes about a point of sale product, right? So I don't know. I would like to believe that, of course, because I have so many SoFi shares. I would definitely like to believe that, but I see more slow and steady growth for Galileo, with the whole growth at a reasonable price thing, instead of looking at explosive growth. I would love to see explosive growth out of SoFi, and I have a target price for SoFi in my mind that today would probably seem ridiculous, and I'm not going to say it on air, but let's just say it's a 10-year price target. Okay. Yes. According to the Electric Viking, the incredible amount of wind and so is being developed in China, especially since 2021, and solar. Yeah, that's true. Just like the United States, and they're actually doing a better job of it because they have to. That'll have their own oil supplies. They don't have a history of political engagement with oil producers outside of the United States, which can work for them and against them. And they actually don't have the expertise in oil production like the United States does. We provide a lot of the oil production expertise for most states in the or surrounding the Persian Gulf and in the Middle East. So we are always involved in the oil industry there, and that gives us a lot of leverage, right? China doesn't have that. Now, they do have the benefit of never having engaged in imperialism in the Middle East, or in Africa. Okay. Maybe the Zheng He voyages, that really wasn't imperialism. That was just, let's sail around and demand tribute from everyone and show everyone how great China is. But they don't have this history in Africa, and that has served them really well in terms of the development of economic ties in Africa. And they also have a huge Chinese business diaspora in Africa and in Southeast Asia as well, which is going to help them out. So, and Vane H almost always gives me a super sticker. Thank you so much. Let me see here. Doug B says, I recently bailed in my BAT and lit ETF positions. I bought boring pick because base metals ETF. Yeah, so I understand why you might have done that. In this instance right now, BAT is, lit rather, is one of the ETFs that I'm buying more of. And I'm not buying a ton these days, but I am buying more in the way of the lit, which is a lithium battery chain ETF. And I think that's a great way to go for investment. And I think that's a great way to win the race, basically to come in second or third in the EV race, because it doesn't matter who wins, battery producers are going to win right along with them. So, yeah, we see horses for courses. LFP is excellent for stationary storage. It's not. It's actually using a lot more. It is using a lot more vehicles than you might think. Even Tesla makes LFP batteries for export to Europe. They haven't arrived here yet. And I use lithium ferrophosphate batteries for everything on my boat right now because it's better than deep cycle batteries right now in terms of energy output. Almost twice the energy output for about half the weight. And I think you'd be surprised when you look at the performance numbers for the Blade battery. I don't have them off the top of my head for CATL's batteries, but they're really comparable to some of the batteries for the less expensive cars that are produced here in the United States. I mean, the Blade battery is comparable to anything that VW is putting out, anything that that Polestar is putting out. It's really pretty good. And look, it's not the best technology that wins any race. It's the one that can reach the masses, right? The Model A and the Model T weren't the best cars of their day. They were just a good enough car at a really reasonable price. And that's what we're looking at when it comes to LFP technology. Is number one, it's cheap. Number two, it's safe. And number three, you can get the materials pretty easily. And there's a lot of examples in history of those technologies winning over everything else. And you're right, it's today's technology. And I think it's going to beat out most other technologies of today. And it's going to have to be something new that actually replaces LFP. And this is especially true outside of the United States. It's going to be really, really cheap to get a lot of cars on the road with LFP batteries rather than some of the cathode chemistries we have here. So, awesome mention of battery tech. US need. So we are getting together with the program. The Inflation Reduction Act has spurred hundreds of billions of dollars of investment. Every LG and Honda are building like a $4.4 billion factory here. SK Innovation is building like a $4 billion factory here. There's BMW is opening up a South Carolina plant. VW is expanding and building another South Carolina battery plant. There's one being opened up in Georgia. There's a Tennessee battery plant. There's an Ohio battery plant. There's battery plants that are opening up everywhere in the United States. And within a couple of years, I don't think China is going to be quite as dominant in terms of battery production, as they are right now. So, and failed LG Chem system battery. So far, VW is now paying big with recalls, political and nonsensical decisions. And I would need a little bit more clarity on that. Like, there's so many battery recalls right now that I can't keep up with them. And for the life of me, I can't remember one from LG at this point, or VW. I may have missed that piece of news. So let me see here. Michael Will says, I keep hearing that Russian oil. Russian oil is still going to get through because China and India keep buying it. And large, and I don't blame India. They have a long history of being non-aligned. I mean, since independence in 1947, I believe they've had a policy of being non-aligned. They've not allied with Russia, not allied with the United States. Their big worry, of course, is our alliance with Pakistan. We keep selling Pakistan F-16s, and they're also dependent on Russia for military supply, far more than Pakistan is at this point. So Pakistan has a lot of Russian equipment as well as U.S. equipment. So Malaysia is supplying twice as much oil to China as they produce, as they're simply being ignored. So that is not a number that I have heard, that they're selling twice as much oil to China as they produce. I would before I comment on that, I'd really like to investigate that to see if that is true. Because there's a lot of misinformation. If you want to see misinformation on the oil industry, all you have to do is look at TikTok. The best source for information on TikTok for the oil industry is Mr. Global 2, with 2 being spelled T-O-O. And I'm not going to say his actual name on the channel, but he is in the oil business. He's a world-renowned expert in the oil business, and he is merciless when it comes to people spouting nonsense about what they think they know about the oil industry. And he's even corrected, at least 10 of my own misconceptions about how some of the things in the oil industry work. And he's a great source of information. He's on TikTok. His name is Mr. Global 2, and spelled T-O-O. But yeah, so let me see here. Can you one day do a video about ETFs and index? I've started buying into 2 Vanguard items, S&P 500 ETF and the U.S. equity ETF. Thought I needed to diversify and not buy individual stocks. So that's great. But if you own the S&P 500 ETF, then you own an U.S. equity index ETF as well. You're probably getting a lot of overlap, and it may be necessary to just own one of those, right? And if you take a look at the top holdings in those, you may feel, or you may see, that the top holdings in both of those ETFs are probably substantially similar. There's not going to be a ton of difference between the two of those. So you aren't really diversifying if there's a ton of overlap in your portfolio. I own, in different accounts, I own VTI, and which is a Vanguard's total stock index, and another account I own the S&P 500 ETF. And in terms of ETFs, the S&P 500 is a pretty good way to go. It's US-based companies, so they're subject to our accounting practices, but they generate about half their income overseas, which right now is really hurting them. But normally it sort of balances things out. As the US dollar declines, their foreign earnings become more valuable and helps pump up the bottom line here in the United States. As US currency increases in strength, which really hasn't happened to this degree in the last 40 or 50 years, it hurts their overseas earnings. But it also, and so it magnifies losses a little bit because of that. So right now, I think that the S&P 500 may actually, I don't want to comment right now on whether or not the valuation of the dollar has really caught up to the valuation of stocks in the S&P 500, but just know, if you own an S&P 500 fund, you really own an international fund that represents a large chunk of the global economy, and you have a lot of diversification in there across industries, and across sectors, all kinds of things. So yeah. So Doug B says, I bought 550 to 850 bull cap spreads for 1104 after earnings, with max RO of 11. Oh, fingers crossed. That would be super cool. So if SoFi goes over, I think SoFi has a really good chance of going over 550. I tend to sell a lot more calls than I buy, and the calls that I buy tend to be really long term. Like, you might as well call them leaps. So I have some like $10 calls for June 23rd, June of 2023, and some like 1250 calls for January of 2024. That's the calls that I buy generally. And then I actually have some $10 calls for January 20th of 2023 that are probably going to expire out of the money, and I'm going to lose I'm going to lose my ass on those. So so not happy about that, but that's the first time in a long time that I bought some really long distance calls out there and have been burned on it. So first time in a long time. But once again, I don't buy a ton of calls. And when I do buy calls, normally it's not on a stock like SoFi. it's going to be on a stock like Johnson and Johnson, and I'll buy it 2 years out and I'll pay the price for it, right? So leaps are a great way to do long-term investing, but you got to be really patient on that. So Jay says, you're right. The competition in the EV market is red hot. In China, just wondering is why the U.S. ignoring their tech partner, SAIC, and so largely because it's just not traded on U.S. exchanges, and it's not just that. Almost every U.S. company, auto producer, has a tech partnership in China, and they're not receiving a lot of press. Like at one point, the Chinese the Wuling Mini, which is actually a partnership between GM and Wuling, that was selling something like 40,000 units a month at one point. It's just little tiny, or almost 50,000 units a month. So yeah. SoFi says, I don't see, or Gilmore says, I don't see SoFi's advantage over Schwab. No, absolutely not. In this market, because of interest rate spreads and because of the increase in trading income from fixed income and commissions, I think that no, there is absolutely no reason right now, on a medium term basis, say 2 to 5 years, to invest in a SoFi over a Schwab. And because Schwab right now is building a multi-year income stream when it comes to interest income. SoFi's ability to do that is a lot smaller than Schwab's is right now, just because they aren't involved heavily in fixed income trading for their client base. And it's fixed income trading for their client base where they're going to see a multi-year improvement in earnings. And when I'm talking to Schwab, I'm talking about the pension plans that they manage, the 401k plans that they manage. There's just a huge. Not only that, there are all kinds of pools of money where you do overnight trading to generate interest income and things like commercial paper. That market is coming back from the dead at this point. So, there right now there isn't an advantage in terms of that line of business, but we're seeing the growth of financial services. Like, how much more can Schwab grow in terms of financial services? Not much. What they can do is, they can improve the position of their interest income and commissions and fees, but they can really only do that on a sort of linear basis at this point. SoFi's advantage is less than that, of course, when it comes to like the interest income advantage. But in terms of exponential growth, it's a lot higher, and they don't actually need to grow that much to really outpace the amount that Schwab could possibly grow. Unless somebody gets eliminated in that large financial services space, meaning somebody gets absorbed, there's just too much competition for them to grow much larger than they are right now. They're battling with, SoFi's not competing against Schwab. SoFi's competing against people that are unhappy with Schwab, against other companies that are trying to grab the business from people that are unhappy with big financial services corporations like Wells Fargo, Schwab, Goldman Sachs, that sort of thing. So, and that's who a lot of these fintechs are competing against. It's almost like they're in separate markets. It's the people that are like, I have a TD Ameritrade account, but and I've been doing business with them for years. I was forced to go there by a former employer, but I'm not gonna take my money out of that big financial institution to go to a Schwab or to go to a Vanguard. The money that I have taken out has gone to smaller players to kind of like test out the waters there, to really just understand their products. But more and more, I'm doing business with SoFi. More and more, I'm even looking at some of their business services right now. So I'm pretty excited, and I wouldn't be looking at their business services unless there was a real reason to go and is going to benefit my business by lower transaction costs, which is the reason I'm looking at going with them right now. So, SoFi should benefit from. So the halt in loan forgiveness, they're not looking at people that owe $10,000 in loans. That's not their primary market. They're looking at the folks that are in high dollar professions that probably owe $50,000 to $100,000 in loans. They're looking to refinance those. The people that are really going to benefit from, and remember, even those people, even if they get $10,000 in loans forgiven, now you have some clarity about how much is going to be forgiven, and now you might be more willing to go and try to refinance at this point, although interest rates have made that a little bit less palatable at this point. So, Edward, does Schwab only deal with great credit union professionals with 100 green card? Does Schwab offer 1 point? Yeah, is So actually, they don't only deal with great young credit professionals, but that is the majority of people that Schwab deals with. They do offer, I don't know if they offer 1.5 on their checking account. I haven't had a Schwab checking account in years. And free of physical branches, not free of physical branches, which is something, but their main focus of business isn't clients like you and me. It's institutional business, though. It's really going to be institutional money management. That is Schwab's main client base. So here, hey Jason, I bought the ticker code UI. I thought it may be the only tech stock that hasn't fallen in the last 5 years. Any thoughts? You're talking about Path, right? UI Path. Yeah, I think it's actually a great thing to look at. I don't know that it hasn't fallen in the last 5 years, but I do know that automation is not going away, and they're not the only company in this space. But I'm looking at Indeed.com and a number of other sites where they do tech hiring right now, and almost everything in the IT space is about automation. And there's just a scramble for workers out there, and they're taking anyone with warm body or anyone who has a pulse. Basically, I know people that went through a coding school. They did 6 months, and you and I both know. I know people that came out of school with a 4-year degree in computer science who couldn't code anything. And they, at least they couldn't produce anything in a time to market manner that was effective. But right now, it's a lot like the late 1990s in the dot-com era. They're throwing anyone with a pulse who says they can code at a computer right now to see if they can do anything. Some of those people are going to get shaken out of the market. But in terms of automation, and there are people that specialize in automation processes, and I know a couple of them actually go to my academy. They're doing really well, really, really well in terms of job offers and that sort of thing. So let me see here. I'm running out of time here today, guys. I'm going to address the last questions here. Recent FOMC chatter leads me to suspect that the language will change to slowing increase 1102 with a predicted 75. Yeah, so I think they're going to have a 75 basis point rate increase. And then they're not going to halt there. They're going to be smaller increases, maybe dropping back to half a point or a quarter point per quarter after that, not per month. So, and I think they're going to increase the rate at which they are, at which they're selling bonds. So that doesn't have exactly the same effect, but it has the effect of taking liquidity out of the market. They're literally going to sell those bonds and sit on the cash, right? So, yeah. So Jason, jealous of the lithium batteries on your boat, man. Oh, I heard electronic trolling motors just go for days, no recharge needed over the weekend, 1 day suit. Actually, it's not as expensive as you think, and you can order really good ones just off of Amazon, and I'm sure they all come from China. So, thanks for tonight. Got to go. See you again. See you next time. So Turkey keeps buying Russian oil and gas, and all of Europe keeps buying it, so they feel like they're not buying from Russia, even though they kind of are. Hypocritical BS. Yeah, I'm not sure. Turkey is also working on another gas terminal too, which is they're basically going to double the capacity of the gas terminal they have right now with Russia, and they're also trying to cut a deal right now with Kazakhstan as well, which would bypass Russia to a degree. So yeah. TD and Schwab actually merged. It's just that their technology platforms aren't merged yet. So I think that the competitive advantages of EV should be their price and maintenance cost. I think tensions with China will push this goal further in the future. Yeah, that's a competitive advantage for the consumer from a geopolitical and national security perspective. I think that EV should be pushed just because we can pretty much do everything we need to here, and you can generate all the electricity we need on site. So this is probably not something very popular to say. I'm actually a fan of nuclear power. I think we should have more of it, but I also think we should have a lot more in the way of green energy as well. And like I said, being dependent on fossil fuels for over 140 years now has just led us to a world of conflict. And I would like that era to end. And I think that electrification of transportation is going to go a long way towards that. Now, it is going to impoverish countries like Saudi Arabia, and it's going to impoverish countries like Russia, which is already impoverished if you're not one of the 4,000 or so oligarchical families that control all of the resources there. And I think it's going to cause massive disruption in oil industry worldwide, including here in the United States. There's going to be a lot of job losses in the future, or we'll see. we're still going to be using all of our every bit of oil that we can produce in the United States for forever, essentially. Despite the fact that people talk about energy independence is a very different calculation than saying we produce all the oil we need. We do not. We never have. We're still a couple million barrels a day short of producing all of the oil we need. The energy and being a net exporter of oil is also misleading, and it's all manipulated for political reasons. The next exporter of oil actually includes all of our oil derivative products like plastics and distillates and that sort of thing. So things that aren't like used to power a vehicle. But we've never made at least since the early 1900s, we've never made all of the oil that we need here in the United States produced it. And it's unlikely that we ever will until we start to reduce demand. And that's one of those things that I haven't done a very good job of explaining in this channel, largely because I just started talking about energy back in April or March or April. But anyone who's been investing for a long time has paid attention to the oil industry. But I'm shocked at people that have been investing in the oil industry for a long time that really don't understand. They really don't understand what they think they understand. And a lot of it, when it came out last year about all these people saying that, Biden canceled all of these oil leases. Now, all the oil leases went through. It's just that royalties were raised. They were canceled in March. They went through in September and again in November, every single one. And there were more oil leases approved in his first year in office than I think any other president in history. Not only that, exploration rig count went up by 50% in the same year, and everyone's saying we're not drilling. Not only that, the other thing was people keep talking about the Keystone XL pipeline and saying how that's causing the Keystone XL pipeline was never in operation. It would not have been in operation until the end of 2023 at best. It has had no effect on oil prices whatsoever. And it doesn't matter. Everything from that pipeline that would have gone through that pipeline is still coming through the United States through the millions of other miles of pipeline that we still have. That Keystone XL pipeline was really a pipeline that was being built over territory that was seized by eminent domain for the benefit of for the benefit of a corporation, not for the benefit of the people of the United States. It was done for the benefit of a corporation to make it slightly cheaper for them to export things through a port in the Gulf of Mexico. I mean, if I were president, I'm not sure I would have approved or disapproved it, but because of those reasons. But it has no effect on oil prices, and the rhetoric surrounding it is absolutely shrill and absolutely political. It doesn't matter at all when it comes to oil prices. The Keystone XL pipeline, I'm tired of hearing about it. I just heard more about that this morning on a call from someone who should have known better, but they didn't. And anyway, guys, I got to take off. I got some things to do today, and I did want to say thanks everyone for the super chats. I hope I didn't miss any. So, so got a super sticker from Tel666999. Thank you very much, and I will see you folks next time. I'll be back on Thursday for sure, and I look forward to seeing you guys again. Thank you so much.